All right, guys, welcome to Forex Fridays with Deontay. And tonight's topic is going to be on weekly range review. We're going to do a recap of the month for EU. We're going to talk about pair filtering process, so how we select certain pairs going into a new month. And then we're also going to talk about gold versus DXY and a few other correlated pairs. And then we can get into some Q&As. So our first topic is going to be the weekly range review. So if you have any questions, you could please type them in chat. But once it's relevant to the idea that we're talking about, I'll answer it right there on the spot. But if it's not relevant, you save it for the end and we'll go through those questions as well. So we're going to start off with the DXY. So we know this week is a holiday. You see the week stopped short here on Thursday for the DXY. But looking at the overall premise and what it looks like based on the weekly opening price or Sunday's opening price, you can see where the best buying opportunity occurred for the week and what day it landed on. It was a Tuesday. And you can see it was somewhere around after the London session. So in between the London session, the dead zone here, we could see there was a low point there at 6 a.m. and price rallies back up going to a premium. So it went from being at a discount for the week and closing higher. Now, ideally, if you had the idea that dollar was going to go higher, you knew that one of these days, Monday, Tuesday, or Wednesday, was going to make the low of the week. Mainly Tuesday and Wednesday is where you would ideally want to find the low of the week. Going into Thursday, that's where you would expect the high of the week. You can see Thursday does. But we do have an early close. Wasn't a full day because of the holiday. But you can see how Thursday, for this week at least, made the high of the week. So Tuesday made the low. Thursday went the high. But notice, it's doing it below, drops down first, then rallies up. That's what you're seeing constantly week after week. Now, not every week is going to look the same. It's going to have a different profile. It's going to look a little different. But from its very basic idea, you want to see price go higher on either Monday, Tuesday, or Wednesday if you're bullish on the week. Now, everything vice versa if you're bearish. If you're bearish, you're expecting price to either make the high on Tuesday or maybe Monday or possibly Wednesday and then make the low on Thursday and then come back and close on Friday. So that's what you would look for inverse for a bearish profile for the week. So just looking at it, Sunday's opening price is your natural line in the sand that explains where overbought and oversold is. That's where I'm getting premium and discount from, that idea. That price here is fair value because it's the start of the week, the weekly candle. Now, if you don't have the weekly candle, you could use the Monday opening candle and use that there and draw that all the way out. It's going to give you something similar to Sunday's opening price more times than not. So if you don't have Sunday, use Monday's opening price and draw it all the way out to Friday and use it as your overbought and oversold condition for the weekly profile. And you see when price gets above Sunday's opening price, ideally you're going to see the best sell conditions happen above in a premium above the weekly open, Sunday's opening price, SOP, right? SOP. Price here on Thursday, you can see tops off and then sells in a premium range. Now, vice versa, you can see price drops below the weekly opening price in a discount. Right down here, it makes itself cheap before going higher. So that's just a natural indication in price. You don't need an indicator to tell you that. The market itself is already telling you that, right? The way it's situated, the open, fair value. Remember this line. It's very important during your weekly projections. So let's go down to EU. And then we're going to talk about some lower time frame entry ideas. So the London model and the New York model. So you have the best of both worlds for those that are available for that time session and what they're looking for that day. So we got that weekly opening price again. Imagine if I took this line away and how would it look? I took it off. It looks like nothing. But when we place this indication, right? This landmarker on the price, you see it makes a lot more sense. And that's just one idea. We're making all the abstract ideas a lot larger because we can just tell where the best sells are going to happen above the weekly open or Sunday's opening, SOP. For those that are just joining, SOP, Sunday's opening price. It's the same thing as weekly opening price. So we're not confused. The same idea. When price is above that price point's a premium, you want to sell because price is higher. When price is below it, it's at a discount, it's cheaper. You would more likely want to buy. But you'll see there are going to be moments in times where you're forced to sell on the discount. Even though price is below this price point here, you can see it does rally, right? It does rally, but it also sells while being cheap. There are going to be moments like that all the time. Even though price is in a premium here, you can see how it's running up. It's buying in a premium. But some people may say, well, Deontay, you said once it gets above the weekly opening price, it should be selling. That is the idea case scenario if you're looking to be a seller. But if you're a buyer, you're obviously going to be buying at a higher price. And that may not last as long because it's getting more expensive. The buyers are going to turn to sellers. So just looking at it, Tuesday makes the high of the week. Look at that. Out of all the days, Tuesday makes the high of the week. And then Thursday, well, actually, Thursday looks to make the low of the week, but instead we see Friday make a lower close. But we can see how it's running up. It gets a lot of traders to go long from Monday to Tuesday. And a lot of traders, we could take an educated guess, a lot of traders were chasing price probably along the lines here. And then price went short and distributed very heavily into Friday. But notice it does it where? In a premium. So the ideal sell condition landed on a Tuesday and in a premium territory. But let's take a look at Monday's London model example. So we're going to go back between midnight and 2 a.m. So if you're unfamiliar with this idea, I would suggest you take out a pen and paper and write down the steps. I do have a lot of videos on it speaking on the steps, but if you're new here and you're watching this, this is just so you can get an idea and a premise on it and you can start studying it early. 15-minute time frame. We're looking at midnight, 12 a.m. to 5 a.m. Correction, 2 a.m. That's our dead zone. This is the, pause it right there. This is our Asian lunch. Make sure I got that correct. This is midnight. Yep, right here. This is our Asian lunch right here. 12 to 2 a.m. Going into Monday, 2 a.m. And everything I'm doing is based off of the 15-minute time frame. So we're looking at the London session, which is 2 a.m. to 5 a.m. So keep these times in mind. This is 2 a.m. to 5 a.m. Now, I wouldn't personally be trading this because I would be sleeping. But for those that live another part of the planet, they probably would be up trading this. They have available time to trade that. Or you make the sacrifice and you make it to the session. You're going to be marking off all your buy side and sell side liquidity pools, which is going to be framed around swing highs and swing lows or clean highs and clean lows. So that's a swing low, 1, 2, 3. It's a very simple structure and price, a pattern you can recognize, right? The higher low on the left and a higher low on the right. That's a swing low. So we're going to assume there is sell side liquidity. What is liquidity? Money, orders pending below a low. That's all we're going to call it. People that went long here, right, have a stop loss, SL, right? Stop loss below here to prevent any drawdown or further loss in equity. They put a protective stop loss, get them out the trade. I don't want price going lower than this low. They have it there. Same thing, vice versa. We have a swing high formation. A swing high is going to have a stop loss above it because potential sellers came into the market and they're placing a stop above it, presumably taking the odds that they're not going to get price to run their stops or run that high again. It's going to keep going lower. So you have buy side liquidity up here or money above here, whatever you want to call it. We have the opening price of the kill zone. So that same idea we were just talking about, that same belief system of the weekly opening price can be applied here on the London opening price. So this is 2 a.m.'s opening price. It's just simply London's open. So we just type it out. London open. And it's at 2 a.m. That's the opening price. That candle right here that opens, it's right there. That's the price point. So we know that. It's an objective thing. It's not subjective. We know it's objective because we all have the opening price of 2 a.m., at least for this liquidity provider, Oanda, right? I'm using Oanda for it. So there's different other ones here. So there's like EU. You're going to see like Forex.com. You're going to see Oanda. You're going to see FXCM, ICE, Pepperstone, 8 cap. You're going to see a lot of different ones. I use Oanda, right? Trusted source. I'm going to use that one. So I believe in their liquidity pool, their spreads, and them not messing around with the order flow as much. So it's going to be Oanda. 15-minute swing high. We're looking to see if buy side or sell side is rated. So we play it forward. Price comes down. Right? Does not raid buy side or sell side. So we keep playing it forward. And as we keep progressing, see price does what? Raids what? Buy side right there. So price raids buy side. It's that liquidity pool that's above that swing high. So it doesn't run any swing lows, but it runs buy side. Let's take a look at this on the 1 minute time frame. So there goes the buy side liquidity pool. We're on a 1 minute time frame. So we went from the 15-minute to the 1 minute time frame. So after we raid the buy side liquidity pool, we want to start stalking the setup. We go down to the 1 minute time frame because we're trying to reduce the risk. We're not trying to enter on a higher time frame. If I've already started labeling my liquidity pools on a 15-minute time frame, my entry time frame has to be lower. So if I'm framing it from a 15-minute time frame, as you guys can see, right, we're framing this from a 15-minute time frame. That swing high, that swing low. There's no other ones that we can see here. Let me just double check. This is not a swing low. So this is how we're framing it. So it's framed here. But when I want to look for my entry, it has to be on something lower. It can't be on the same entry time frame. It's either going to be in the 5, the 3, the 2, or the 1. I generally just go down to the 1. You're going to see setups here on the 2 minute and 3 minute as well, because everything is a fractal idea. What you see happening on the larger time frame is going to happen on the lower time frame. So we're going to look for a swing low, the entry idea, a swing low that is ran with a fair value gap. So you can see right there. See if price runs it, runs up into it. See if price comes back. So this is going to be the entry technique because it's a swing point, swing low, 1, 2, 3, fair value gap. You can also see that we're above. Let's double check. We're above Sunday's opening price. So, like we said before, anything above Sunday's opening price or the weekly opening price, it's a premium. It's overbought. It's more expensive. And we're going to find ideal sell scenarios in here. We're looking for the sell idea, preferably in the kill zone if we're an intraday trader. So specifically between either 2 a.m. or 5 a.m. or between 7 a.m. and 10 a.m. or 8 p.m. and midnight. So those are the only times we're permitted to trade, unless you're a swing trader. But we're looking for that entry idea, 15-minute swing high raid. What's still available to price? That swing low down here. So you want to see if price is going to draw down here if we're looking for the sell. But we need to sell above 2 a.m. So play it forward. You can see we finally get back up there. And we look to go short, and there goes the short. So you can see price goes up, and then it goes down. So that's where the short would be. You see how price taps into it? Yes, there's going to be drawdown for sure. Let's go back again. So this whole premise is if you're looking for the best conditions, just because simply, right, we're not using directional bias, just because we're above weekly opening price, right? This is for the trader that doesn't have much time to analyze, daily draw. And they're just in at the market just to take it as face value. Where are we? Are we expensive or are we cheap? This is that trader that just comes in every day. Okay, we're above the weekly opening price. I want to look for a sell because we're expensive, right? We're not looking about what day it is. If it's a large range, small range idea, right? Those are other filters, right? That's more abstract ideas. But if we're coming from a very broad perspective on it, we're above the weekly opening price, period. That's a fact. It's very objective, right? We're above the weekly opening price. So it's premium. So during the day, we could look for sell setups. Does it mean it's always going to be 100% granted? No, because time has to align with price. Price has to align with time. It's always a consistent thing. It has to happen during one of these kill zones. Sometimes it does happen prior. I'm not going to lie. It happens a little after it or before it. But in general sense, the volume or the real move is going to happen right here in the kill zone. It's going to put you on track to catch a injection of orders. And that's what we're looking to do every single day, potentially. There goes, once again, the entry idea. It's a swing low, 1, 2, 3. Look at that again closely. 1, 2, 3. It's a swing low. Why is this a swing low? This point here, this line. This is a higher low on the left and a higher low on the right. So that's the swing point between two candles. Three amigos right there. Takes only 3 bars. Since we're on the 1 minute time frame, it's taken 3 minutes. 1 minute, 2, 3. It only took 3 minutes for this small price structure to form. Then this forms fair value gap through it. But the swing point has to be inside the fair value gap. That's where we're going short. Now we're going to take the short only if the sell side is intact still. So you see how price runs down even further and it doesn't take out the sell side that we framed on the 15-minute time frame. This is still a feasible setup. Now, if price were to take this out before getting back to this entry, I wouldn't take this entry. So that's just some clarifications here. I would not take this entry if price hits this first, breaks the sell side, returns back into that entry idea that we wanted to see price hit and go short at. I wouldn't take it after that. I'm going to take this. It's still a feasible trade because it hasn't liquidated the sell side liquidity. So it's still available to me to take. So it's going to look something like this. Short here. 15 pips. Here and here. That's what I'm aiming for. So this whole way, we're not in the trade at all. Why are we not in the trade? For those that are confused. We're not in the trade yet because it didn't return to our entry. It never hit our entry point. And our entry point is this black line here. So it's very clear. See that? That's where we would go long. We didn't get that entry yet because it ran away. It opened. This next candle opened and ran away, and it kept running away. But it didn't hit our sell side projection, our draw on price. Think about this again. It's our draw. We expect it to go in a certain direction to a certain level, objectively, not subjectively, not support in demand zone, right? A random box. We're not randomly drawing support in the demand zones anywhere. That's not what we're doing. We're not saying, oh, this is a new zone here, and this is a zone up here, right? We're not drawing these zones out. We're objectively picking measures in price based off of swing points. It's very objective. I want you to understand there's a difference in how I'm framing my liquidity pool. It's not random. It's an objective selection. Price tags it. There we go. Right there. On this candle, we would be short here. Price runs in. At that moment in time, we would be short. Price hits it. The order is filled. Now we're in a live trade or a demo trade, right? Let's say you're demo testing because there's nothing wrong demo testing this in a paper account. We go short. We know there's going to be drawdown. It's inevitable. Not all trades where you enter is going to turn around on the spot. We got the general premise of where a quality trade sell setup should be. Why is this a quality sell setup? Because we're selling above 2 a.m., the kill zone itself. Correction. Where is 2 a.m.? Nope. Actually, we're not. We're actually selling below 2 a.m. in this example. So I had marked this off wrong. My bad. So this is 2 a.m. This would be selling at a discount. Close to fair value, right? Let's give it that. It's close to fair value. It's not heavily discounted, but it's close to at least the opening price. You'll hear that time and time again from other teachers like ICT. If you could sell around the opening price, or if you can buy around the opening price, still gonna give you a solid, decently placed trade to take on risk. So here in this example, looks like we don't even get an entry. Let me just keep playing it forward. Any fair value gap to the downside? No premium? No, we don't. But all in all, we can see how we got the idea of price taking out buy side and running to sell side. So it would have been a good sell setup, but if this entry would have been above 2 a.m.'s opening price, we would have taken it. I don't like to take discounted sells because I'm very particular with what I want. But for other people, this may make a means to sell, right? It might trigger you to say, you know what? I like that selling opportunity. I would sell here. Still a quality trade. It still played out really well. But all in all, I would want to sell above this price point up here because it's the ideal. It's the pinnacle of all trades. Now, sometimes you may not be able to catch it depending on your entry technique. But notice here, take a closer look. Before this sell off, you do have this. What do you have? You have a fair value gap here going down, price repricing into it, and then going short. Every time it went short for the kill zone, it happened to where? Above 2 a.m. Isn't that very odd, right? Isn't that very strange? They definitely had an agenda here, right? The market makers, right? When I say they, I'm talking about the entity in the marketplace, right? Who is them or they or whatever in the marketplace? It's gonna be the commercial speculators every single time. This market is comprised of three speculators: small speculators, which are people like you and me, retail, small fries. We mean nothing to this. Our spec of our account means nothing, right? These people have equity beyond imagination. They can hold trades a lot longer. We can't hold trades as long, right? There are certain things we can't do because we don't have a certain account size. And it's just benefits of having a larger account. You can do certain things. Price rebalances and goes short. But notice every single time it gets above 2 a.m., the best selling is happening above the opening price. And then it drops. And it all happens here above 2 a.m. multiple times. It gave you one opportunity here. If you were to count how many times it gave an opportunity, right? It's hindsight though, but it's good study. One, two, three, four, five, six, seven. Count this as eight. That's nine. That's 10, 11, 12, 13. It gave 13 opportunities to find the sell. If your narrative was to the downside. But notice the framework here. I went from the 15-minute time frame and framed these two opposite ends, buy side and sell side. We target one side, purged one side, revert back down to the other side. This looks just like what we're seeing on the weekly time frame. Run to one side, run back to the other side. All right, let's take a look at the DXY just briefly, just like we just showed here. I know this week was a holiday and it was short ended, but just look at the idea. It's the same thing. Sunday's opening price. It runs to one side, runs back to the other side. That's what we're showing here in EU. Runs up, runs down. But notice, look at that quick repricing too. After taking out the 15-minute swing low, look what happens after. It runs right back up. Is it a coincidence? No, it's not. Because look at where it's buying at. It's buying below Sunday's opening price. That's Sunday's opening price. Look how it comes down and hits that specific price point. Even if we blend other ideas, right? Balanced price range. We got a breaker, more other concepts being layered on top of it. But you see how it's very methodical in where it wants to place itself when it buys and when it sells. It brought right there out of all the price points. Why did it not turn here, right? When it broke this swing low, it could have just broke this swing low here that it created itself here, right? Another sell side liquidity pool. Why did it not just run that low here and then run higher? No, it specifically brought itself back inside this range here and back below the opening price to find another sponsorship for longs. Boom, hits it, and it runs higher. In its own essence, too, it's always creating and destroying liquidity pools. It creates buy side, it creates sell side. In the near future, it goes and destroys those same liquidity pools that it created. Notice how it's creating liquidity pools right here. We're done with this example, so we'll delete this. But notice how it created buy side liquidity pool again. Look at all these highs here that it's creating. A top. What does it do? Later within the day, it comes back and it wipes it out. Not a coincidence. It's always seeking, destroying, and creating constantly. It's a constant flow over and over and over again. So that is our London idea for Monday. And the other idea was here on Thursday. So we had a New York model. So the same premise, same idea. Think about everything that I'm telling you. Pay close attention. The same idea that I'm going to show you happens during the New York session. It's all rigged. Doesn't happen every day. It doesn't happen on the same pair every single day, but it happens on a handful of pairs frequently throughout the week. It happens over. I show this stuff over and over and over again. And this is a very broad way of putting it too. Let's say you just happen to open up your chart on Thursday and you see by the New York session we're below the weekly opening price, right? We're just trying to give a little story behind it. And we can see we're below the weekly opening price here at this time of day, as if we're live trading. We're just about to enter. We're a couple hours away from the New York kill zone, which is 7 to 10. And the dead zone here, there you go. That's the first dead zone, right? Or one of the three dead zones right before New York session. Another time period where we're most likely going to expect either deep retracement, potential reversal, or consolidation. I don't like those three odds. So, especially since there's a consolidation in that factor of the market giving that scenario during this time period, right? The market is giving out certain phases during certain times. It's a lot of layering here. 5 a.m. to 7 a.m., we're going to frame that liquidity pool off of the 15-minute time frame. So we have these double bottoms, I believe, or whether it's a swing low. Let me see. It's a double bottom. So both of these are the lowest low within that time period. In that time period, if I didn't say it, it's 5 a.m. to 7 a.m. So these are people that probably have another time period where they're free and they can trade the New York Hill zones for 7 to 10. Now, I would be more available for that if I didn't have other duties outside of trading to trade that, but I don't. I'm more free during the nights. That's why I like to trade the Asia session. The same idea that I'm showing here is what I use to try and find setups during the Asia session. This is buy side. We have the opening price here of the kill zone, 7 a.m. That's the open of that candle there on the 15-minute time frame. Let's put it in NY. Shout out New York, 7 a.m. All right. So that's the open. So the same premise too applies here. Anything above here is a premium. Anything below it is a discount. So let's play it forward. So price does run the buy side liquidity pool, right? We can say that objectively. We can see it runs that swing high. Not a random high, but a really specific one during a certain time of day. It's above 7 a.m. It's not above Sunday's opening price right up here. It's below Sunday's opening price. So there's a conflict between the kill zone open and where price is and the weekly opening price. So it's in a premium for the kill zone, but it's in a discount for the weekly open. Now, you can sit here and say, okay, they are at conflict. I'm not looking for a trade idea. When they both sync up, that's where I think you find more probability trades or higher probability trades. So even though there may be a selling opportunity here, which you will see, so if you play it forward, you're going to see how there is a selling opportunity here. There we go. Play it forward. You can see how price comes down and then right back up into what? More buy side liquidity. Still keeping that sell side liquidity intact. So we still haven't ran sell side. Now we finally get into a moment in time where they both line up. Price is above, right here, starting here. Price is above 7 a.m. and the weekly opening price. So now they're starting to both line up. Price is now giving what? That ideal scenario, that double confluence. We're in a premium for the kill zone and in a premium for the weekly opening price. So they're now finally lining up. At this point, you could still be looking for a short opportunity. But the entire way, just want you to show on the 1 minute, so we could play that data out. That's the 15-minute time frame. That's the sell side liquidity pool. Notice how the sell side liquidity pool on the 15-minute time frame, look how clean it looks. Now, if you're telling me this is not engineered, right, or mechanically placed in by an algorithm, look how clean this is. This is a coincidence. Has to be a specific level that it just decides to do this real tight and then run away. Runs into that. It runs into this level, moves sideways for a few minutes, and then runs out of that level. That has to be engineering, right? It's constructing something. It constructed what? Sell side liquidity pool. That's where all those orders are. Longs were building up here. Whether that was retail, large speculators, or commercial speculators. There was longs that were produced here at said point because you can see price runs away. If anybody in the market went long, we could take an educated guess that they're placing their stop loss below this low. It's a pretty pretty realistic idea to think of. If you were to go long in any buy position, where would you place your stop loss to protect yourself? It would have to be right below that low, right? That's trading one-on-one. So that's where the stops are residing. And we want to target the stops. We want to be on sync with the market maker, right? Whoever has their hand on the market, we want to follow their hand. Because what they do, where they move their hand, is where the market goes. So let's play it forward. So we're in a premium. See if there's any selling opportunities of any entry ideas that I use. Not really. There's a smash day candle, but not much to really stop and talk about and highlight. There's a buying opportunity. Let's see anywhere buys. No fair value gap entry. Yep, right here. Technically, this would be my entry if sell side was rated, which it was. just not the 15-minute time frame sell side I marked off, right? There could have been a 5-minute sell side liquidity pool here, and someone was framing that liquidity pool based on the 5-minute down to the 1 minute, and it probably rayed, and it most likely did, right? Look at this swing low. Everything is so fractal. Everything is so fractal, and it's not random. Why did it pick this swing low? I don't have no idea why, but it picked a swing low, period. Objective, right? Not subjective. It picked a swing low at along the lines of this rally up here, rallying up. There's swing lows being created. There's small pullbacks where it looks like it's going to go short and then it continues going higher. Those are swing lows. You can see the same fractal idea. It's still a swing low. 1, 2, 3. Three amigos. Always 3 bars. Look how price runs that level and decides to turn around. Strange, isn't it? Very strange. Very unique patterns here. Now, not to say I would have seen that, but it's just great to understand the premise of how price moves and what its objective is. It's trying to refill, take out, gear up, gas up again, refill, and then find another way to target more liquidity pool while creating liquidity pool. It's going to run back to what? Maybe these highs that it just created up here, right? It just created these swing highs or these double tops or relatively equal highs. Look how price starts to gear up to take it out. And where is it doing it? Below the kill zone open. That's not random, right? Instead of really hunting really hard for a certain PD array to form anywhere, just take a stance. Are you long this kill zone or are you short this kill zone, right? If we're just keeping it very simple, are you long or short? Cool. You're long. Okay. You're only going to take longs when you see price drop below 7 a.m. Period. Period. That's like a rule, right? You're setting yourself rules to become a more sustained and quality trader. If you're looking for longs and you're looking for the best case scenarios, the pinnacle of all trades. What is the pinnacle of all trades? In a buy scenario, buying cheap. As a buyer, you always want to buy cheap. It saves you money, regardless of quality, right? We're not talking about like a materialistic product, right? We're not talking about like a phone that's broken or something like that, you know? Maybe the upscale is good on that, but we're talking about just price is just cheap, regardless of the quality of the material, good, or service. It's just cheap. So when you buy it, you're saving money and you potentially have an upscale to sell this back, then higher retail market. That's a great scenario. And that's what you're looking to do as a trader at, at all means when it comes to being a buyer. Same thing, vice versa. If I'm going to be a seller, I need to only be looking in. I had the idea going into the kill zone, and I only want to be a seller. I have to sell above 7 a.m. because that's where the best sell is going to happen. It's premium. I get to sell my goods and my services at a higher cost to retail. I love that. That works for me. I'm going to make profit off of that. Got to understand how both sides make profit. The buyers make profit when things are cheap. The sellers make profit when things are expensive. When things start to gain value, the sellers start to come in. When things start to lose value, the buyers come in. Because on each side, one side thinks, the buyer thinks in the next couple of minutes, in the next hour or two, or the next couple of days, or the next couple of weeks, or maybe even the next couple of months, I think that this asset class, this commodity, right, this Forex pair, this cryptocurrency, this altcoin, whatever it is, I think that this thing is going to gain value within the next couple of minutes, weeks, days, months, etc. So you buy cheap, and you hold. And whether or not you win or lose, that's your main goal in life as the buyer. That's it. That's the fundamental principle of being a buyer. As a seller, everything vice versa. I want to sell my good or service at a higher cost, right? Something went up in value, and I'm going to keep pushing on the buyers. Keep buying. Yes, this thing is hype. It's limited edition. The only shirt in the world, whatever this is, how certain luxury brands make themselves to be indistinguishable. So meaning they're unique. No one can actually put them out because no one else does what they do. For instance, Ferrari cars, right? You have to one, prove that you can make Ferrari money to actually start buying a Ferrari. No dealer is going to come in and just allow you to buy a Ferrari if you can't afford it. And then there's definitely probably fees that you have to pay, right? And there's certain things to get into the Ferrari club. So that is a unique item and it's rare and it's going to cost a lot for the consumer. And Ferrari wins. They get to sell their Ferraris at a higher cost ticket every time. And that's your main goal as the seller every single time. Sell this good or service at a high price. I want to do it. And the market does it here. Even in this little small fractal idea, it runs up and then it goes short. Not saying you would have caught this exact move, but that's the whole premise of how the market lives and breathes. That's it. That's all it does over and over. Premium, discount, discount, premium. And then it might sit in a range for a bit, or it might bounce back and forth between premium and discount until it finally spills over to one side and the market shows its true hand. Or is it a false hand, right? A false break, because we know that happens in the market too. Price runs higher. Notice we're in a line again, right? We're in a premium territory again. Let's keep playing it around and see what happens. So we go back into a premium range. And we can see how price starts to sell off again. Very interesting things that we're observing here. Right? Price runs all the way up here to get above the weekly open. And then it starts to sell off. Can't be random. Notice all the interactions with the opening price too. Notice how price tapped into the weekly open, strong reaction away. Trades up close to it again, trades away. Now we're going into the dead period here. We're going into the kill zone, but all this would not be seen as tradable, at least from 10 to 12, because there's a kill zone here for those that know. The London lunch. So there's another kill zone you could trade here. I don't preferably trade that because I don't think it's feasible, but there might be an opportunity here, right? Not every day, but there might be an opportunity here within this idea structure in this time period from 10 to 12 p.m., not midnight, 12 p.m. So from 10 a.m. to 12 p.m., there might be a setup here. There's a characteristic to this kill zone. What is that characteristic? Reversal, right? The markets have certain characteristics and codes that it follows on certain time periods, right? This time period, 10 to 12, you're either going to get a continuation pattern, right? Price continuing what the New York kill zone does, continuing up, right? Because the kill zone itself is going up. All right. The kill zone itself is going up here. And then London close would continue that. But instead, we see what? Price go down instead. It gives a different characteristic. It gives a reversal pattern. Here, reversal. Doing opposite to what the kill zone, New York kill zone was doing. This kill zone is going down. And it starts that trend downwards, continuing into the New York lunch. So right there, what's forming there? Another dead zone, right? 12 all the way into what? Asian session. You can see there was a break here, holiday, right? So even though we had a holiday this week, and markets are closed here in the US, you can still see like markets are still doing the same thing. I know FX is still continuing, DXY is still trading. Like it's closed, but the market's still open. It's a hard thing to explain. The market's closed, but the market's still open somewhere else in the world. So even on this week, we can still see setups are forming, even on holiday weeks. Now, some people may say, "Oh, I would avoid trading a holiday week where the market's ever closed," or maybe I don't like to trade a day before the markets close or a day after. So markets closed on the holiday, the next day, they may not want to trade that next day. They may follow the next 2 days. So little small things like that people use to filter in their ideas. So let's move on to another pair, an NU. So NU, we haven't talked about NU in a long time. So I'm not trying to be biased with pairs. I try to show you guys different pairs every single week. Same idea, same premise. We have the weekly opening price, and just look at it. Look at the chart. Look at where the best sells are happening, and look at where the best buys are happening. Yes, we're looking at it from a 1 hour perspective. I like to look at it from the 1 hour perspective, even if you go on the 4 hour. This is what it looks like on the 4 hour time frame, right? If you go on the daily, this is what it looks like on the daily time frame. So each day itself, as it progresses. So you can see how it went up. Tuesday made the high of the week, clearly, and Thursday sold off and made the low of the week. Go back to a 1 hour, and all that data is transcribed like that on the 1 hour. So it's very interesting to see how the candles are also producing the higher time frame candles. And all the higher time frame candles are made up of these smaller candles. It's a very cool thing to see. Maybe it's just a nerd in me, but very interesting thing to see. So all the best sells happening above premium, all the best buys happening below discount. So let's look at this London model. So the London model, same idea. So we're going from midnight to 2, 15-minute time frame. I'm going to turn on the session indicator so we can see it, so I don't mess this up. 5, that's the opening price there, right? That's the open. This candle opened, so it starts there. So that's the open. I know some people might be new and watching, and they may not understand the open of the candle and the close of the candle, but those are things I don't personally sit back and teach on. Most people that come to me already have a sense of trading, idea of trading sometimes. Swing low. Right, so now we're starting to frame it. Now we're starting to frame. This was 2 a.m.'s open. This dash line is 2 a.m.'s open. Here, 2 a.m. comes down and takes out what? That swing low right there. So right at 2 a.m., right before prior, look at that carefully. Look at that. Objective measures, like I said, here, swing low. What time period is this? Midnight to 2 a.m. New York Eastern Standard Time. So just convert that to where you live in the world. I live in New York, so I don't have to convert it, but I didn't make the rules. All the markets work on New York time for some reason. Not a coincidence. Swing low here. Price comes down, runs that. So we rated that. We also have what? Swing highs. Let me just double check. These are double tops. And this is the swing high here of the session. So we got that swing high. So you have sell side and buy side. Look how we're framing that again. Notice as well, it's consolidating. Within this window, short window from midnight, 1 a.m. to 2 a.m., consolidation. Not a coincidence. We see this often. This is one phase, all right, and there's 4 phases in the market. And the 4 phases are consolidation, expansion, retracement, reversal, and all markets start in a consolidation. So when we see this, we should be happy because we're going from a small cycle. Consolidation pretty much is a small cycle, right? It's not doing much. It's not gyrating higher, gyrating lower. It's actually just staying pretty calm and still in a range, being bound to a certain price range. So it's bound to something here. It's almost as like someone's holding it back. The market makers have their hand on this market. It doesn't want to move. Why does it just stay here? But as soon as we go into this time period, 2 a.m. to 5 a.m., for some reason, and it's not some reason, certain entities are trading at this time period. Price comes in, price runs the swing low, sell side, and it brings itself where? Below Sunday's opening price and the London Open, which is 2 a.m. So we're cheap for the kill zone and we're cheap for the week right there. At this point, we could probably be looking for a great ideal buy scenario, not sell, buy. So this is everything transcribed on the 1 minute. That was that 15-minute low. That's that 15-minute high. And look at how the price action is from midnight, 1 a.m. to 2 a.m. Look at that whole zone, that shaded zone that we had. Look at that. Look at the consolidation. Night is day. So s- swing low rated, weekly open, kill zone open. So discount, discount. What are we looking for? Most likely a long opportunity to form below 2 a.m. Or even as well, we want to see that long form below the weekly open, especially when there's a double confluence. So play it forward, play it up. See price drops down even lower. Do we get any buy opportunity here? Let me just double check, just looking. And we do. So our buy opportunity is, I believe, right here. If my eyes haven't mistaken me. Um, yep, there it is. So that's the entry idea. So we have a, what is that? A value gap that runs a swing point. Now we can see it's not below Sunday's opening price as well, but we have the idea and structure that we did run sell side. We do have buy side above us. We were just in a phase of consolidation, and we know all markets started in consolidation, and it's either going to jump to either an expansion, reversal, or retracement. That's what we're expecting. That most likely we're expecting expansion. So price still consolidating as it slowly gets down here, right? It's rocking the traders to sleep, rocking them to sleep. Nah, I'm gonna keep selling. I'm gonna keep selling. I like it going. It's going short, so I'm gonna sell. Rocking the traders to sleep slowly, but eventually happens. Price hits a zone and runs higher, and price runs up. And when we look at this idea again too, you can see another entry idea here to here. Same idea. Fair value gap, swing high. This one is partially mixed in below Sunday's opening price. So this could be the entry you want to take too, right? The exact fair value gap, but where the fair value gap is below the weekly opening price. And you can see how it taps right into that zone below that area, and it goes long. And it targets what? That buy side. Not a coincidence that it got back to the high of this area where they're engineering, right? They're engineering the highs here and the engineering the lows here. They broke the low first, then they run the high. Most times, the market is going to put you on the right side by its natural flow because the market's never wrong, generally speaking. The market's never wrong. And it's always going to put you on the right track. So if you come from a perspective of rating stops, right, expecting false breaks, right, the framework that I'm putting front is the market likes to break buy side or sell side and change trends. So I like to start from there. That's my consensus. I start right there. That's the whole start of my argument that the market is likely to just run one side and run to the other side. Right? That's the center of my ideology or my methodology. The center of it, right? The focus point. I think that the markets like to raid price points and change trend. And it does here. Runs there, change trend. So I like that idea. Turtle soup idea, false break idea, fake move idea, whatever you want to call it. But that's what I like to think of. And it happens pretty often. And look at how it runs back higher. The entire kill zone. Keep playing it. And notice, look how it ran to 2 a.m. towards the end. Say it was like consolidate almost for a bit or reaccumulating orders here, right there, here. Then it starts doing this. But notice where it's showing the most response to. Look at the level, very objective. Why 2 a.m.? Coincidence? I think not. Multiple times. Here, it crosses over, hits into it, trades away. That's when it breaks the high. So when price raids a liquidity pool, you can expect some type of pullback. I want people to understand that. When price breaks a high like that, you are still open for a possibility of a pullback or reversal right? Price doesn't have to keep going higher. Price can now be rebooked to go short. Doesn't have to rebook and go long. It could say I'm already booked up and I like the amount of orders I've taken above these highs. I don't need any more. I don't need to continue going higher. Right at that high, I'm going to reverse price. That could happen. That could happen. So be cautious for that, right? Pay the trader, especially if you get to the projection point or the draw point. You expect the price to get to XYZ and it finally got to XYZ. Make sure you pay yourself. Take something off. Move your stop loss into break even or move it into profit. So that you can at least be at ease that your efforts don't go to waste. Always try to tell traders that. Make sure your efforts don't go to waste. We don't have time to waste in anything. So expect the worst. But most times, believe in your model. Believe in faith that it could run higher, but always protect yourself first. Have yourself first. Don't just leave it up to the market to decide. You have the chance to either take profit or not take profit. That's it. Or cut your loss early and move on. Instead of holding the loss until it hits the stop loss, cut the loss early. If you really think the trade is going to fail, cut it early. Why wait if you know that it's going to hit that level? You're only going to be more upset when it finally hits that level and you told yourself 20 minutes ago, man, I should have got out this trade. Get out and price trades higher. So that's NU London model. Sell side, buy side. Nothing changed. Sell side, buy side. And I think we have an example. If you were to play this out with the kill zones on it, it'll be like so interesting to see. Right? Look at it. There's like one kill zone missing, like I said. It's right there. That missing kill zone. London close. Reversal idea. Look at that. Oh my gosh. Notice certain time periods where it's consolidating again. It's almost all the gray areas and a little bit of the green area. Look at that. Look at all the times the market consolidated in the color regions. Only certain colored regions were consolidating more than others, and more sessions were more whipsaw like London, like New York, right? It looks like a whipsaw almost. It runs one way, then it runs back the other way really fast. But then you look at other sessions outside of the London and New York model, you'll see it's normally ranging. And then it might run really fast, but then it starts ranging again. And then you'll see that even in Asian kill zone, it would run a little bit and then it starts ranging. It's things that we see. It's natural occurrences. It's natural observations here. I just want people to sit here and take off all the indicators and observe it. But when you place the like session indicator on it, it makes things a lot more clear. You start to understand, okay, this market is coded and it is it's a map. And things have to happen at certain times and align at certain times for trades to occur. Now, this trade's always happening. I want you to know this trade's always happening. But from your point of view, your lens, your perspective, you may not see it happening for you. But someone else in the world may see something right there, right then, and they may take that shot. And it's a win or lose situation. Now, some people fall on a spectrum on how probable their trade setups are, right? And we're trying to move higher in the ladder. We're not trying to be lower in the bucket. We want to be higher up in the bucket. We want to be a more informed trader in what we're doing. We want to put rules around what we're doing. We want to put concepts and we want to follow certain ideologies and belief systems so we have a more patterned quality trade, right? A more successful journey. It's not random. That's the whole point. We're putting codes in front of what we're seeing and observing. We're trying to describe what it's doing. And that's what we're doing here. London model. We're looking at this one here. You can see how we could like color certain points in time and observe it and study just that time and that time period and that kill zone. That's why I like the session indicator. Outside of that, I'm not using any other indicator. The indicator has to just help me perform tasks, right? Like AI, right? It needs to just help me do things quicker. That's the whole point of, I think, indicators, not telling me when to buy and sell. So you have sell side here. Notice, look, just looking at it right here and what it did here. Look at how it rated sell side and it stayed below, and then it finally started trading up, building up the longs below the open. Below the open, look at that. Oh my gosh, such a nerd, bro. Look at the price action that's happening here on the 15-minute time frame. Take off this lipstick, and we're good. Swing high. We're clean highs, double top, so we mark it off. Right? Buy side. Buy side. Play it back. Where's that framework again? The framework is 15-minute time frame, New York session. Sorry, is this a London session or a New York session? Is it two London? Oh, it's London for sure. London session, midnight to 2 a.m. That's the framework. We have consolidation. Let's look at it on the 1 minute. How does that look on the 1 minute? Look at that. Ah, disgusting. Choppy. Choppy, right? Choppy here, runs down, chops. Chopping, chop, chop. Runs up, chop. Runs down, chop. This is not a trading environment you want to trade in. Not at all. Play it forward. What happens? Purge. Right there. Look at that purge. See that? What do I mean by purge? Liquidation. Right? They liquidated. Buyers have been liquidated. They've been knocked out the market. Took their buy stops because they have a stop loss, SL, because they're buying. They think it was going to buy. Ran them out. At the flip side, too, right? This is where you got to really think and you got to really believe in this system and the way it works. You got to believe. It's the faith that comes with it, too. You got to really believe that this is how the market is working. Because if you don't believe in it, you're not truly going to understand these concepts. It's like any religion, honestly, and I'm not a super religious person, but in order for you to really truly believe that this happens, you got to have faith. You have to believe that this happened once upon a time. That's what everybody argues so hard and strong on their religion, because it's their belief. They believe that. No matter what other people tell them, they believe that's what's occurring. You got to believe the same thing here. I believe that when price does this, I think people are selling. That's one of my belief systems. I believe there are sellers being induced into the market to come in and sell simply off the fact because they see this point broken. That's my belief. I believe that every time and vice versa. If price were to go up instead and take out this high, I believe there is some type of inducement of buyers into the market. I think that the market is going to get retail traders, even large traders, right? Or maybe even potentially commercial speculators, right? Whoever, but they're getting people in the market, mainly people like you and me who are clueless in the market. There might be a couple of large funds, whoop-de-doo, but they can always mitigate their losses and get out quicker than us. It's hard for us to mitigate. It takes time. Mark this off. Here. We're looking for a long. Why are we looking for a long? Because we're below 7 a.m.'s opening price, and we're below what? Sunday's opening price. Double confluence in this scenario. Keep in mind, I think sellers are selling, but I want to buy. I want them to sell it to me. Keep selling it to me. You know why? Keep knocking the value lower, right? I want people to panic. Get rid of it. It's not worth anything. Get rid of it. It's worthless. Burn it. It's worthless. I'm going to go buy that junk, right? Right? I'm going to buy that junk. And I know that this junk or whatever they're throwing away or burning, I know it's going to turn into gold eventually. So I'm looking to buy. I think it's going to increase in value. So what are we looking for on the 1 minute after rating that 15-minute swing low? Look at those highs. The same choppiness that we're looking at, we're looking for price to return to that area. And it's even more apparent here. It's not there too. It even happens here. But from the framework, from the 15-minute time frame, you can see it's even apparent. There's buy side here and there's buy side here. There's stop orders. People that went short put a stop loss here. People that went short put a stop loss here. We can take an educated guess, and I think most people would agree. We're looking for a fair value gap that breaks a swing high. Let's see if we got. Oh, we did. Happened really early, right here. And this is on NU, right? A lot of people don't talk about NU. Still a major pair, but not one of the more popular ones. But look, NU's doing it too. Same entry idea. Swing high, fair value gap. Here, fair value gap. Some people may say extra emphasis, this candle closes up, at least at this candle's high or above. Some people like to see the fair value gap. Last candle close above this high. So that's just a little tip. Price trades into it. What would you do? You go long, right? 15 pips. That's what we're looking for. So we're looking for price to trade now down into that entry. Let's see if it happens. Next candle, it does. You see it? You see how it traded down and up? At one point in time, that candle was black. It was a down candle, right? I have my down candle set to the color black. Down. Look how it goes down. Then it runs up. It finishes up. So we're triggered into the trade long. A live trade or a demo trade is now pending in whatever account you're using. You're in long. You have your stop loss. Press play. Notice where we're buying again. Below, pause, 2 a.m. open, which is London open. Coincidence? I think not. Right? We hold that trade. We're in profit by the end of London close. And let's say we're still holding that trade, right? And we happen to not get stopped out, break even, we took partials, whatever. Look at how it gets to those levels that we marked off here. Not a coincidence at all. Price starts running. Even outside of the levels that we framed here, there's other levels outside of that that it can still target to. It's not oblivious, right? The market's not oblivious to the levels we framed. It's going to continue the trend. Just because it gets to this high, it's not the end of the game. The game keeps playing, right? Who knows when this end game is going to happen with all this money, fiat currency stuff? We don't know. There's no end game to this market. It's going to keep going. So otherwise, so to think that price is going to hit to a certain target and just stop there is a little foolish, you know? Think the market is live. There's always levels that it's going to either keep creating or return back to. These are old levels that it created. It's going to return back there. And if there's no old levels to return to, it's going to create new levels. And those new levels are going to sooner or later turn old. And it's going to run away from it and return back to it again. So there goes a Friday London session long. And there goes the New York session. Wow. You get to see. Like, notice how at certain times the market is doing certain things. Look right here, 8:30. Ah, my gosh, 8:30 candle. Yep, right there. This is that large candle up, that large spike, right at 8:30. Ah, man, you'll see this often, right? Maybe news dropped. Double check what was Friday. No, economic events. Yep, go figure. Core PCE, spending budget, personal income and budget, all that flew. US data came out, and this is what happened to New Zealand dollar versus dollar. TP hit. So that was a London session idea that didn't hit its final target till New York session. But you could see how holding trades can be rewarding. Now, if you didn't find a setup here, could you find a setup in New York? Yeah. You could, with the idea and context that price is probably trading higher. Yeah, you can. And that is also still what? Below the weekly open. So we still have a chance of price probably trading higher before the end of Friday. We even have late news too. Fed Chairman Powell, whew, another market maker, speaking at 12. Right at, was it 12? At 11:30. Let's see what happens at 11:30. As price gets close to 11:30. Right? Speech, Powell starts speaking. Whatever he talks about, and the market does some type of reaction to it. Yep. Reaction finally shown here. Up, then down. Oh, just before the market closes. Seals the hammer on the coffin. Boom, right there. Yeah, very interesting. But yeah, that's your weekly range review. So doesn't matter the currency pair. You see these ideas forming over and over and over again. You may see this in futures too, just different time. It's the time aspect, which you understand, because I'm more of a Forex trader. I'm looking at these times because that's what aligns with this market. Now, if you're trading futures, just a little different. You're just changing the time zones and where you're trading. You're trading crypto. The crypto zones may convert, right? Not saying I trade crypto, but I think London close specifically, like maybe late New York, London close, cryptocurrencies tend to trade a lot during that time period. But yes, the timing aspect, always time, and whether it's overbought or oversold. So hopefully that would make sense. And we're going to move on to our next topic. And our next topic is going to be EU versus UJ. So this was a great month. And time again, the work says it for itself. When you understand price action and you understand draw, you understand certain things, you'll start to understand. So let's start over. Right, this is we called this already, right? You guys know the daily updates. We knew that the price is going to keep going shorter. We said sell after up close days. The last daily update that I did was after this false break. Price got back down here. We confirmed that false break, and I didn't do a daily update for the last week. No, I didn't do no daily update at all last week. And we can see how after this update, sold, right back down to March opening price. We saw the inverse. Just a recap, we saw the inverse for DXY. Price dropped below the opening price or ran up. So we know they're inversely correlated pairs, right? Keep up. They're inversely correlated pairs. But if we had to start over from scratch, right, to paint the story to how this month went, we watched it from the day-to-day action as I try to paint it out for you guys every day. Let's start over, right? Let's clear everything, actually. Let's clear everything. We'll keep the formula here. We'll keep this here. We'll delete the lines. Yeah. All the lines. Make it clean. Start over, right? Like if we're heading into a new month. And this low was deleted too. Brand new month. This is the data I'm using. So this is also going to be a blend of the filtering process too, and how I pick pairs for next month. How did I arrive to picking EU for February? Right? People say I don't talk about this stuff, but I do. People somehow skip over it or probably haven't watched all the videos. How do I pick a pair for the next month? How did I arrive to wanting to pick EU and trade EU for the month of March? Let's think about it. I thought about the interest rate differentials. So how do we get the interest rate differentials? People ask me. Interest rate differential is going to come by the banks, right? The global central banks, interest rates, and taking those two interest rates and subtracting them and seeing what number we get, or seeing the difference between those two. So you can see here for Australia, get rid of that, right? The ECB, sorry, the ECB. The what would this be? This is RBA, I think it would be called RBA, right? The acronym, Reserve Bank of Australia. The RBA has a 4.3 interest rate, right? 3.5. And the Feds of America, Central Bank of America, has a 5.5 rate. Very interesting, right? When we subtract that, we see the difference. And we know that there is a difference. There is some difference in between these two here. Now, when we look at something like British pound, right? The BOE, the Bank of England, the Central Bank of England, BOE, it's a 5.25 interest rate. Compared to the Feds, you can see there's a smaller interest differential, way smaller. This is a 0.25 difference here compared to what we have from the RBA compared to the Feds. I like that. This has the largest interest rate differential, so I went with that. When we compare it to, right, EU, 4.5. Now, the pairs that I had selected for the poll in the Telegram channel before we started trading this month, I had gold up there, right? Just to throw up gold because I know like people like trading gold. And last year I had a great trading month with gold in the month of March, and I wanted to see if they would continue too, right? So I put it up there. Some people voted for gold, some people voted for EU, some people voted for AU, but that's how I was able to select out of the majors. Now, New Zealand wasn't really looking for it. See, it's 5.5. I wasn't going to trade NU. NU didn't even make the cut. GU didn't make the cut. It's exactly equal, right? I think this would be the Reserve Bank, RBN. That's how the acronym would be, RBN, Reserve Bank of New Zealand. Their central bank is even with the Feds. Their currency, right? Their rate, 5.5. Fed's 5.5. I don't want to do that. I'm not going to trade that. It's two strong currencies headbutting each other over and over again. Now, from a different perspective, it's as if, okay, you open up a bank and you're offering a 5.5 savings account interest, right, on their money, right, for people that open up with or clients that want to open up shop and hold bank accounts in your bank. And I opened up a bank too, and I provide the same interest rate on their savings account, right? They would accrue 5.5 interest on their savings every whatever dollar they put into their savings account. I'll give them 5.5 interest on their money, right? So their money's making the money. How do they decide whether to go with you or me? Pretty hard decision, right? It would come to other fine line things, other little things in between that. But the fact that we both have the same interest rate differential, the competition is not really going anywhere, right? I'm not crushing competition. You're not crushing competition until one of us becomes more competitive and we raise our rates. Think about it. We raise our rates, our currency, right? Or in this example, our bank becomes more as a resource to clients. So you take your rate up to 6 point, right? 6.0, right? 6% interest. But I keep mine at 5.5. All of a sudden, there's competition again. You change you change the dynamic, sorry, the dynamic of the interest rates. More clients are going to go to you now. You have a 6% interest rate. I still have 5.5. I'm not competitive enough. What did I do eventually in time? I raised my rates to 6 too. And you're like, oh, I'm gonna raise mine too. You raise yours to 8. But I can't raise mine to 8 because if I raise mine to 8, the economy is gonna collapse. Something like that. That's what's happening right now in the world. Literally. I know I kind of dumped it down, and I'm saying it jokingly, but that's what's happening in the world right now. Now, it doesn't apply to every single country in the world, right? Mainly applies to a lot of developed nations, not underdeveloped nations. And it's a sad thing to say. I don't like to say that other certain countries are third world countries. They're not, because that's messed up to say. It's not an ethical thing to say, a moral thing to say. I respect all countries and all cultures. But from a certain lens, right? Not my lens at least, but from a certain person's lens, we all could guess that person's lens. From that lens, this world is classified as a third world country. That's just how it goes. And for some reason in those countries, they have the highest interest rate, but the currency still go to nothing. They have an high interest rate, but investors are not convinced that their currency is worth anything. So that's when the system is completely broken. If you have a high interest rate, investors should be flying and buying your currency up, but they're not. So something's wrong. But in those developed nations, you can see where the interest rate is higher, their currencies are withstanding the time and being competitive and getting investors there. So that's the same reason how I picked EU and AU to go onto the poll for March. That's one aspect. Seasonality also plays a role, and we'll talk about that as I show you how I pick the next pair for next month. We have IPTA look back data range. Right, throwing a lot of concepts at you guys tonight. It's been a while since I made a video, and I'm behind on videos, honestly. 20-day look back from the opening price from March, right there, 20 bars. Since we're on a daily time frame, we're just taking 20 bars, 20-day look back. Boom. We're gonna do another 20-day, 40-day, another 20-day, 6 day. So we got three quadrants broken down into 20-day increments. Then we cast forward 20 days. So we're projecting 20 days forward. We're expecting, the reason we cast forward 20 days, we're expecting something to happen in the marketplace. What we're expecting is we're expecting price to either create a liquidity pool and go destroy another liquidity pool. That's what we think is going to happen. Very simple idea. We want to start there first. And we frame those liquidity pools based on the IPTA look back data range, right? The intermarket price bank algorithm. We're using that IPTA, right? That's the census as well to our model. It starts there. It starts with IPTA. That's that belief system. This swing high is our 20-day look back high. Get rid of this high. And get rid of this. No, that's our low. This swing high is our 20-day look back high. It's also a swing high, so we mark it off. This is our swing low, so we mark it off within that quadrant. That's the lowest low and the highest high. So we mark it off. Same thing here. The highest high within this quadrant here is here. The lowest low of that quadrant is here. Now, you may ask, this low is already broken. Deontay, why are we marking this off for? Because it can still be a sensitive price point to the PD array that forms around that price point here. And you'll see over and over again. Or price in general is going to react really sensitive to that price point. Got the 60-day high and the 60-day low. 60-day low is already being ran out. But I put the dollar signs above the ones that are unbroken just to be more specific with what happened with that area. The ones that don't have the dollar sign, it's already been rated, but it means that it can still be sensitive to price. We had a seasonal tendency of a bullish euro and a bearish DXY. Now, it wasn't completely bullish for the month. It was bullish then bearish, I believe, if we really were trying to be really specific about the seasonal chart and what it looks like. Since we're going over it, why not be transparent and show you how I do it? Here, this is the source that I use. The website is up there in the chart. You can see it right there. People ask, what's the website? It's right there. You can pause it and look at it. Euro dollar. So I go search. And you're either going to see one that says futures or you're going to see one that says FX. And you can see this is March here. So March, you can see small decline. Like if you're being really picky and like how it looks, it went down first, then went up, and then it went down again. So there was a short decline, a rally, a long rally, and then a short decline too. And that's exactly what happened for EU. So funny. Like this is a treasure map. It may not always happen exactly the way you see it here, but there are times where you'll see certain months it happens exactly the way it paints it or portrays it to be. That's exactly what happened to EU. So we were to fast forward, just to look at it. It wasn't a real rally down or decline down, but there was a rally, at least for the first 2 weeks up, and then after that there was hope that it was going to go higher, but then it just fades. That's exactly what the seasonal tendencies was suggesting that was going to happen, and it happened for March. So very interesting to see. But we were painting it day to day in the daily tracking, right? If you haven't watched the daily tracking for this month, go back and watch the daily videos every single day. They're really short. Some are short. Some days I talked a little more, but you go back, it would take almost like probably 30 minutes to watch all the daily episodes for the month that I did. From here, we knew that there was an interest rate differential. Even though the Feds were stronger and we're expecting a higher dollar, higher euro dollar, there's still a difference. And also, another filter I did was the monthly chart. The previous month was small. February, you can see this is February here, at least most of it. February was a small range candle. It didn't have a large range expansion. So that's another reason why it made the poll. Same thing for AU and gold. The last month, or the month that is currently ending, was small. So that's why it made it to the list. I want to expect that the next month after the small candle is going to kick into a large cycle. So that's why I picked EU. And it kind of did. It showed range expansion for sure. It gave more dynamic move. At this point, I saw price running up, right? I said, wow. It dropped below the open. I start zooming in now. It dropped below the open just for a short moment. Dropped below the open. Had a discount opportunity to buy below March opening price. Some may have seen it. Some may not. A lot of people probably did not see this, honestly, right? Retail at least. Price goes long. By now, I think retail would be chasing, would be long. Reason why I would say that is because price is breaking swing highs, right? We had a break on this swing high here. Though it's not a swing high that was marked off from IPTA, right? This 20-day look back high. It's still a swing high, period. Right? It's not like the market is just forgetting about this high here. It's not going to set a sequence of codes after breaking it. It's going to. Same thing here. It's not like this is not important. It's still important. Price runs up, breaks the swing high. At this point, I said, I want to see after price rated this swing high here. I said, this could equal what? Bullish momentum. Because what? A swing high is broken. So this is starting to fill out our trend formula. Bullish momentum. We want to see a higher swingle form. That's all it takes. And then number 3 would be look for longs. Once you get this confirmation of these two variables. Swing high broken. That's step 1. So you're on alert. Broken. That's step 1. Step 2, you want to see a higher swing low. We didn't get that higher swing low. And I was telling you guys, when I was talking you guys through it from the daily episodes, I said as the month progresses, the first week, it normally flushes out a lot of retail traders, right? NFP week, all that brings a lot of people to the table. Come gamble at the casino, right? Because you think you're going to win big. And that's what happens a lot in the first week of the month. So this inducement of trades going long. Now, this could be correct because the month could continue going higher. This sometimes is not inducement, right? Sometimes it is the real move. Instead of fake move, go short. Sometimes it's not inducement. But notice how I'm trying to classify certain things. It's either this or it's that. If it's not this or that, it's nothing else. That's how I like to give it. It's either option 1 or option 2. There's not an option 3. So I think either this is a inducement or a false break. That's what's happening here as price breaks this swing high. But if we're following bullish structure and the idea, do you mean swing high broken on 1? It's future seasonally. Just reading the chat. RBNZ. Thank you. I knew my acronym was off. It was RBNZ, Reserve Bank of New Zealand. Yeah. Which is advisable to use futures or spot. For the seasonal, either or, they're the same. If you click the chart, you'll see they're literally the same on this. Like if you click one that says futures, Euro futures, it's gonna look exactly the same. So there's no difference. Just double check to make sure they look the same. They all look the same. Do you mean swing high broken on 1? I'm not sure exactly what you mean by that. But yeah, there's a swing high broken right here. There's swing high broken here on the 4th of March. Price breaks. I'm looking for. I see what you mean. Swing high broken. Appreciate you guys. Chat coming through again. So swing high broken. Yes, swing high broken equals bullish momentum. So price breaks this swing high. We're waiting for a higher swing low. But there are going to be times where price breaks a swing high. It does not print a swing low very often. It just keeps trending higher. Or you get like a down day and then it keeps going higher. That's what we were looking for. Oops. Did not mean that to happen. So instead, we get price going up and trading up higher. I said price is probably going to continue going higher, but I do expect, I said around this time, I do expect some type of pullback or retracement from NU, from GU, from AU, from gold. I was expecting some type of retracement to occur. You can see we got a retracement, and then finally said, okay, got the higher swing low. So that's where I was telling traders, okay, higher swing low, we're following this idea of order. We're not going to bail on it. We believe that this is a truly bullish market. Even though we're in a premium, we're still bullish because we believe that the month is going to continue trading higher and potentially draw to what? The 20-day high. But you'll see that we failed to get to the 20-day high. Price comes up, makes this higher swing low. After this swing low, I would advise, right? This is a tip. I would advise traders, once you follow this confirmation of the trend, wait for the third candle in that swing formation. Pay attention and listen closely. Pay attention to that third candle in that swing formation. Wait for that high to be broken. This high. If this high is broken, you could look to go long. Or you could even place a buy order right here and look for price to go long. Buy on strength, breaking this high. And see what happens the next day. Instead, it doesn't break the high. So it saves you the trouble instead of trying to predict if it's going to go long. So if you go long after this third candle, just buying it outright, you could win because price could want to continue trading higher. But the confirmation is I want to see that third candle's high broken, then we'll buy. That's a safer route, in my opinion. You would have avoided taking a loser if you just opened the next candle and went long. So sometimes it takes some time to filter certain things out and to be on the safer side. Don't just jump in. This is live funds you're using. We trade our time for money. So you got to be very crucial with the decisions you make. This is high stakes here. There's high reward and high risk, very high risk. So we're being very cautious with how we're getting in, especially for those that have large accounts, right? You just open up a $50,000 account or $100K account. You want to be very considerate of what you're doing with your equity. You don't want to burn through those funds, especially if you're taking on large trades or if you're allowing someone else to manage your account, right? Account management is a real thing. There's some people out here that can manage accounts really well, and people get paid to manage accounts. And some people get paid either through a percentage of the profits, technically like a prop firm, right? But they actually do this with a person. They have a contract with an individual with, an investor with capital. And they say, hey, I'm a proficient trader. Here's my track record. Here's my account. Here's the proof. Here's the models. Here's this. I can manage your account for you. And trust and believe there are people out there with that money, right? There's a high client list out there for sure. High upper echelon of people that trade with a certain amount of capital that will come and pay you top dollar to flip their money and compound it for them. If you can prove to them that you can compound money, rich people want to be rich. They're always trying to put their money into other things that make them money, and trading is one of those things. So if you're able to build that skill set and learn how to trade, you can take that skill and apply it to other people's equity, and they will probably most likely pay you for that. So swing low, broken right there. And that's where the whole idea and premise starts to lose its idea here. It starts to fade. This either turns into two things again. It's always two things: a false break or bearish momentum. That's what happens here. So when price breaks a swing low, I like to consider that either a bearish momentum or a false break. Right now, it's completing the idea for the bearish trend formula. So we're going to say, okay, currently now a swing low has broken. So we're reading it daily, so we're able to understand it. Now we're waiting for a lower swing high. So everything is backwards. Very subtle. Everything is backwards. So we got a lower swing high. We got a lower swing low here. Well, we got a swing low, but this is a lower swing high. So this is a very early indication here. Right here. So this, you can see how this candle is already, this lower swing high already giving you signs that, ooh, something's going on here. And we broke a swing low and we got a lower swing high. Something's not right. And we're in a premium of the monthly opening price range. Are we changing trend? Potentially. So we're waiting for a lower swing high to form. So play it forward. So we're waiting. Now I also said you can sell after up close days, right? The last episode you see on my channel outside of Forex Fridays, the daily updates, the last daily update on EU, I said sell after up close days if we finish confirming this idea or this model. That's what we're looking for. Price come down. Look at that. Lower swing high. So you start to see there's more lines on the chart now. but we're reading it. Hopefully, you're able to follow. We got a lower swing high now. This is day to day, week to week, day to day. Lower swing high. So we're thinking, okay, we got the shorts. We definitely look at shorts here at this point. Like I said, a very helpful tip to really confirm that short is to wait and see if this low is rated. That third candle in the lower swing high. Look at it closely. It's lower swing highs. Look how it's forming. Swing high, swing high, swing high. It's failing to break the high and create a higher swing high. Right? It's not doing that. It's making lower swing lows now and lower swing highs. So we want to see that candle go short. You see, it doesn't. So it saves us the trouble. And this was when the Feds were talking, and this was the interest rate differential. No, interest rate decision differential. I'm not talking about the interest rate decision and the Fed uh, testimony, I believe, or Fed chairman testimony was happening here. And you can see how price turned up. Another change potentially in the market. Why? Because we run this swing high. Take off the annotations again. Price comes up this one day and takes out this swing high. That's when we saw dollar, right? Go back to dollar. That's when we saw dollars sell off right there. See, it went down. Look at EU. EU went up for that day. Inversely correlated. And then after that, we see it sells off, reverts right back down to sell side. So that's what I was saying. Is this a false break? Or is this bearish momentum? Or is this going to be now, right? Flips back again. Is this now bullish momentum? Is it confirming this idea? And as you can see, it doesn't confirm the bullish idea. It was a false break because it quickly reprices, sells back down. But in that nature, too, it still created what? A lower swing high compared to this one, though. So you got a lower swing high, and a lower swing high. Look at that idea. Here. 1, 2, 3. But it's still lower swing highs forming. It was just a raid to get all the traders what? Long again. They think it's going to continue trading that way. And it's possible, but it didn't confirm the bullish trend formula. So if you follow the trend formula, it will keep you on track with what the market is doing. And sooner or later, you're going to find yourself to be able to find good, sweet trades to hold or find for intraday day setups. You just got to be patient with the trend. And after that comes back, what? It breaks a swing low. It resets again. Look at that. Swing low is rated right here. It resets the whole formula again. Swing low broken. What do you wait for? Lower swing high. Play it forward. Look at that. 1, 2, 3. That's the lower swing high formation that forms there. Do you see that? Play it forward. Look how it goes short here. That third candle. So you could have went short right on that third candle's low. And that day you would have made profit. If you would have held to the close of the candle, right, when the candle completely closes, you still would have came up on top. I'm not saying you would have closed at the exact low, but let's say you hold, right? It's another thing you got to think about. And this is something that Larry Williams was making me think about when I was reading his book. He was saying that if you can just buy and hold to the day close, odds are you would see a lot more reward. If you were just sell and hold all the way to the end of the close of the day, you would see a lot more reward. Instead of jumping in, jumping out, jumping in, jumping out several times during the day, just buy and hold, sell and hold for the whole day. Because most likely you're gonna either flip the coin and you're gonna be right. Now, there's many ways to increase that idea of trying to be more right or being more consistent in calling the market. But in any day call scenario, flip a coin. Are you buying today? Or are you selling today? And a lot of people have trouble arriving to that idea. And you play it forward. Look at that. Friday, and now we're going into April. So that's our full EU breakdown for the month. This is what I do month in, month out, month in, month out, just like this. I don't change it up. It has to be the same way over and over again. It comes from certain belief systems. It comes from certain ideologies. It comes from little ideas and tips for entries. It comes from little ideas for intraday setups. It's a lot wrapped up in this, but you need to break it into chunk-sized pieces, right? Got to be able to digest it. You got to be able to understand and comprehend what exactly are we talking about here? From larger ideas. Then we could start talking abstract. Then we could start talking about those little details, those finite details. We could start talking about those things. But we can't get there if we don't understand premium and discount. You see? We can't get to that idea if we don't understand overbought and oversold. If we don't understand the opening price, we don't get to what we're talking about. We can't start talking price action if we don't know these fundamentals. We just can't. So until we understand this over and over again, that's why we always talk about this, because it arrives from this. If you don't understand this, we can't start to understand how the price is saying when should we be selling, when we should be buying. We don't get there. Mm-mm. We just don't. So that's EU. We're going to move on to the next topic. We're going to be talking about pair filtering process. So it still lines into what we were just talking about. It's nothing different. So right now, and I think I have till Monday, basically, I think, or Tuesday when the holiday's over, to make up my mind on what pair to pick and which ones I want you guys to vote for. Right, at least have some. I have at least have some control. It's not just people randomly telling me, "Yo, trade gold," and I just trade gold, or people just randomly telling me, "Yo, trade futures," and I just trade futures. I gotta at least set it up for myself so I can win too, because I'm taking trades here too with myself, trying to show you guys that it's possible. Right now, NJ piquing my interest. Main reason why, right? NJ right now. I know different yen cross, completely different, probably not a popular one, but NJ's been piquing my interest. Why? Right now, it's piquing my interest because of one factor. Is that the moon outside? Oh man, the moon looks so pretty. They're gonna have a solar eclipse like I think next week or something soon. It's gonna be amazing. Moon is so pretty right now outside in the sky. So at least from where I'm seeing it here in New York, we got a down month, and I love down months and bullish trends. I love that because it's a counter trend candle. So if I know the trend on the higher time frame on the monthly chart is bullish, those down months are my best friends, guys. My best friends. I love down months. At least I didn't. I didn't. I'm glad I didn't partake in those. Right. It would suck to partake in that. Right. Having the idea that it's a down month. Last month was a down month, and going into the current month, you want to buy, and it still ends up going down. It would suck to be in that scenario. But let's say we were not in that scenario. Let's say we were in this scenario. Thank you. Facts. Shout out to chat, fam. Shout out to Jeremiah. Facts. Bro, it makes perfect sense. People always try to tell me, "Oh, why do you look at the monthly time frame? It's nonsense. There's no point in doing that. I'm a day trader." Bro, if you were to only harness the power of the monthly chart and apply it to your day trades, bro, I'm telling you, you're not going to be at the bottom of the barrel of what traders are like, right? Right? There's probably certain tiers to these traders, right? We all classify as a certain tier. I don't know these tiers, right? I'm just making up an analogy, right? Like, you know, F rank, C rank, D rank, E rank, B rank, and then you got A, and then you got S rank, right? S rank is the highest rank or whatever, whatever. You want to start moving up that ladder. And those top tier traders, I guarantee you, they incorporate the monthly time frame. At least some of them. At least some of them are using, like, gotta be a handful of them using the monthly chart. So if you're in a bullish trend, a down month is literally 2020 vision, almost literally 2020 vision of telling you, yo, you better be buying next month. If you don't buy next month, you're missing the boat. Let's just take a look at hindsight data. Look at every down month that we had since 2020. Oh my lord, bro. Oh my lord. Look at every down month we had since 2020. Right? Like here, right? The ones that really show good examples, right? Down month. What happens after this down month? Buying. Oh my lord. This down month. Look after this down month, buying. Trends for almost the entire year. Right? For the rest of the year. Sorry, correction. Almost no, half of the year for 2021. Almost the entire year. We're up to May. And then it consolidates going into 2022. But look at a down month. After a down month, look at this. Down month, there was a buying opportunity. Down month, there was a buying. Look, huge engulfed the entire candle. Down month, there was a buying opportunity. Down month, buying. Hopefully this is eye opening because it's such a little idea. What do you think about New Zealand dollar strength though? The strength, I think is solid against the yen. Think about what we're comparing this to, right? Think about that again. That was a great question, but think about what we're comparing this currency pair to. Comparing it to Japanese yen, basura, trash, right? This is not good. So down month, up. Down month, eye opening. Down month. Down month. What happens after the down month? Down month. Down month. I'm not worried about the strength of it against the yen, right? Because that's another thing. I'm not picking. There's a whole nother process to it. How did I arrive at picking NJ? Okay, let's go back. Interest rate differential. The interest rate. Compare the two banks. BOJ. They were just negative since like 2017, 2016, something like that. They haven't changed their rates a couple of years now. Or I think even longer than that, I think. Right? They just raised their rates to positive, fam. Just turned their rate to positive. Everybody thought Japanese yen is going to be the newest thing. It's coming back to life. Da 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 da. How do you raise your rates and the currency still drops? Well, for one reason, it's nowhere near the other central banks, right? In the developed nations, it's nowhere near the UK. It's nowhere near Canada. It's nowhere near Europe. It's nowhere near New Zealand. It's nowhere near all those other places where they already been hiking rates. So Japan is late to the party in that. They've been negative, 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 negative. That's all they wanted. Now it's just turned positive. So it's not going to be a good look for them right now. Nobody wants Japanese yen. Like I really don't understand the argument here. You think people right now are trading their Japanese yen? I mean, keeping their Japanese yen and not converting it into dollars, at least US dollars. If anything, at least like Canadian dollars. Anything else besides their currency is better right now. Outside of the non-developed nations, I'm talking about the developed nations. I would want some pounds. I would like some Canadian dollars. I would like some US dollars. I would like some New Zealand dollars. I would like some Swiss franc. I would love all those other currencies instead of Japanese yen if I was a Japan citizen. Trying to get my hands on some more money. My money is my money has been devalued, bro. I had no control in that, right? As a citizen, I didn't really have control in what the government was going to do, how much debt they were going to get into. We don't have control of that, right? All the corruption, all this other nonsense. Conversation for another time, right? But I'm not gonna go into Japanese yen. But when we go to New Zealand dollar, I'm like, yes, I'm gonna sell my yen and I'm gonna sell it for New Zealand dollar every time because they got a 5.5 interest rate. I want that. So that's why we're not really worried about the strength of New Zealand dollar. So hopefully that answers your question. We've been seeing this trend higher. We got a down month, right? Like that. What happens after down months? As we can clearly see in a bullish trend. The key context to this is it's a bullish trend. So this wouldn't work in a bearish trend. This would not work in a bearish trend. This is only working in a bullish trend. It has to be a down month in a bullish trend. We got that. Higher swing highs, higher swing lows. Yes, along the journey, there's going to be raids of swing lows, and then it runs back up higher. We know that. You can see there was one raid right here. There's a raid in a long time right there. Raid right there. Sell side raid on the monthly chart. Runs back up to what? Look at all those clean highs that they made. All these swing highs. Yes, they've broken each other recently, but look at the plane of view that they're in. They're almost on the same level, right? On the same horizon. Price goes what? Let me take that out. Good job. And it keeps doing that. But right after that, false break. So if you were to saw this as bearish momentum, you would look for what? A lower swing high. But you don't get that lower swing high. Why? Think about the same idea that I just taught you. If you took that same concept from the monthly time frame, look how powerful this is. Took that same concept from the monthly time frame, break a swing low, wait for a lower swing high. We got it. We got it all in one break too. We got the break and we got the lower swing low, right? Lower swing high, correction. So break a swing low and a lower swing high within the break. So you gotta really be paying attention. and understanding what you're visualizing here and observing. So it breaks a swing low, but while breaking the swing low, the next month it confirms a lower swing high. Why? Because look, it's high, it's lower than that one. Perfect. If we're convinced that it finished the bearish trend formula, it's going lower after breaking a swing low. Well, technically it was this swing low first. So it rated two swing lows, this and that one. And we're looking for it to go lower. We can mark it out just to show. Rated swing low creates the lowest swing high. We want to see what? Price at least reach down to this monthly low. Same thing I just showed you on the daily to save us trouble, right? More confirmation. Let's see. Does price run down there? No, doesn't. It runs up instead, right? Let me play it all the way out. There we go. Look at that. Now, if you were to just to buy right at the open or below the open, look at where the money's coming in. Below the open. For that example here, right? Price pushed back up. Finish down, right? But that idea and context that we were looking for price to go lower because we broke the swing low and we got a lower swing high, but it resets again. What happens instead of breaking swing lows? It broke a swing high. So there it goes. Trend formula changes again. But look how you save yourself the trouble because we never break that third candle to go lower. So if it were to break that third candle to go lower, then you would probably have a lot more confidence going short with NJ, but it doesn't do that. It rejects that idea. It revolts it. It trades higher. So that's one reason why NJ is going to be making the list for the poll. So coming from its seasonal tendency too, right? We got to look at this from all aspects. So we're looking at N versus J. So let's take a look at yen first. Right? See, it's the futures. Click it. April. There's a decline too going into it, right? March. And we've been seeing that. March was a heavy decline for Japanese yen. Was it not? It was. Let's take a look real quick. I don't know if you want to look at it doesn't matter if you look at the futures. Either or, it's the same thing. 2016. Oh, look at the monthly chart, Japanese yen, daily. It's going daily. Get rid of all this. Look at this, March. Start of March. Look at the open of March. Same principle. Doesn't matter, guys. Look at that. That's March's opening price. April. Look at how it went above the open, found the best sell opportunity, dropped. Sponsored, broke a swing high here, then it sold. It sold after breaking the swing high here, then it sold off. Sometimes it would fail to break a swing high. So in the same breath, it also failed to break this swing high. Right? It failed to get up there. And then it's also broke a swing high. But sometimes you'll see that it would fail to even break this swing high too, or even these swing highs. It would go up, fail, and then drop lower, creating a lower high. But all in essence, you see up, down, buy side, sell side, quick, dynamic, premium sell, and then probably accumulation. Small buys are happening here. But if next month is going to continue going lower, then we're going to see the same idea. Japanese yen seasonally already, it's supposed to be going from March going down, April still going lower, and then consolidation. I like the consolidation aspect or play because if the currency is in consolidation, I would assume other currency pairs as well will be able to most likely move freely depending on the currency. So if yen is in consolidation, I'm not sure if dollar would go into consolidation too. It's possible, but I would think that certain currencies would free up as one currency pair would consolidate. But if dollar consolidates, a lot of the other currencies tend to consolidate. I think once dollar consolidates, I think the yen crosses start to free up again and they start to run really fast. So just small ideas that you learn as you go along in your trading career. Little things that you wouldn't hear other people talk about often. But that's NJ. New Zealand dollar didn't show that. So all the euro dollars, anything that's not dollar besides yen, um, so I often search this stuff up. It just pops up. April, huge rally, right? Huge rally. There is a decline at Z point, but right now you can see there's a rally, and I like that. It's a rally against the yen, so good odds there. Dollar too. Dollar's bearish right now for April. So if you look at the dollar seasonal tendency, I'm not going to pull it out right now, but the dollar seasonal tendency, you guys could do your research to go look that up. The dollar seasonal chart, April is down. British pound is up. Euro dollar is up. Australian dollar is up for April. So you see a lot of the code lining up for April. So it's going to be very interesting to see April, start of a new quarter. So we'll see. Things are gonna. Some people also will consider this the true yearly open, right, where the year actually starts, Q2. So we'll see how that plays out as well. But that's NJ right now. Other than that, I was looking at other pairs. So I was looking at the majors too. Gold shot right now. Like gold is shot. Like right now, I wouldn't touch gold. Why would I not touch gold? Gold, I wouldn't touch. Actually, let me save that. Gotta save this for later. I wouldn't touch gold right now. We'll talk about that later. Um, UCAD. So I'm looking at all the majors, right? Like I look at all the majors. UCAD. Okay, UCAD. Look, UCAD's potential. Look, UCAD has definite potential right now. So how would I frame this up? Interest rate between Feds and the not even sure the acronym. I forgot the acronym. I'm normally so good with I don't know the acronym for this. I think like BOC. I think it's Bank of Canada. Yeah, BOC. Um, yeah, not a heavy interest rate differential. So I don't like that. I don't like that for the dollar cross. So I'm not feeling UCAD right now, even though UCAD has a down month, which is ideal for a bullish trend. If it's going to continue going higher, that's ideal, right? That means dollar is going to go higher, and Canadian dollar futures is going to go down, which is not really what I want to play out. But hey, beggars can't be choosers. You got to follow what the market's giving you. Can't go against the market. Stop trading against the market. UCAD, we're going to skip that. U.S. oil. I already did U.S. oil, so I'm not gonna spin back around. We did U.S. oil in January. U.S. Swissy, monthly candle, not down, so I'm not preferring it. Trying to clear all my charts clean again. GU, interesting play. Yes, I like GU. The reason I like GU, not because of its interest rate differential, because it's not a heavy or large interest rate differential, but because this monthly candle is closing very small, and yet three so far. So buyers are in, right? So if British pound is going to really go higher, and we got this monthly BPR too, balanced price range. But if this price action is going to continue going higher, man, it should happen next month. Small range cycle. We need another large cycle to kick in. You can see here, large. Look how large this candle is on April. Wow. And we're going into April too. You see this April candle was down. So I want to see this April potentially be opposite from last year and going up. Just to double check, I want to see how April was in the other years. April. So right here, April in 2020 was up after coming off of a large down candle too. So that's good to see. Another April. This April was small, 2019. So April 2018. 2018 April was down. Interesting. 2017 April was up. Interesting. So looks like it's a little different month to month. Not seeing a consistent pattern, of course, but things change. Fundamentals change, and you can't do much about it. You got to follow the fundamentals. What's the most driving force to the market? The interest rates. That's it. And outside of that, sometimes it's construction, how many more permits they're going to be making or allowing the government to make more construction in certain cities or towns, metropolitan areas. So certain things become fundamentals. The sales of homes, real estate, like the market will gauge off of that. So got to pay attention to those data too. GU won't cut it. It's looking good, but the interest rate differential, I'm still going to pass on it. Right? Doesn't really meet my standard. So AU got some potential, right? Definitely some potential. We're closing up. but we're in a small range candle. I like that. We're also creating what? A higher swing low formation. We haven't broken a swing high on the monthly, as far as I can see, recently in recent time, besides here. But this could be a false break. Price coming down here, running this swing low, and then running back higher. That could be a false break, and now price is creating a higher swing low to trade higher again. So looking at it in hindsight right now, is good to see because I'm trying to project forward price action and what I currently have. Higher swing low. So this swing low here, there's a higher one forming right now. That's interesting, right? Little subtle cues on the monthly chart. Now we could take that same idea. Is April, the next month, is April going to open and run out March's high? That's where we look to go long from that daily fractal idea. Right? If you're looking to use this idea on the monthly chart, you look to go long at that high here as a swing trader or position trader and hold to higher prices. Hefty stop loss, of course. Stop loss would most likely be below the recent swing low or some other swing low that you have here on your current time frame in that position trade or swing trade. And you would aim for swing highs in the long term. So you would see potentially Australian dollar potentially outpace dollar, and dollar's probably going to decline and crash. But we'll see. A lot of things in the market are really skeptical right now, right? There's a lot of speculation, heavy speculation in the market right now, and a lot of people don't know what's going on. I don't know what's going on. Who knows? But we're just taking it day by day. I like AU. Doesn't meet my requirements of a counter trend candle, which isn't a deal breaker for me. So AU would make it onto the poll list. So far we got NJ AU. So hopefully you guys like those odds right now, and we'll try to find a third one. It might be difficult to find a third one, but I'm not gonna force it. But we're still looking for best case scenario. AJ is trending higher. You can see all the yen crosses are trading higher. Get after all those down months. That's why I like NJ. So hopefully you guys vote for NJ because that's where I'm rooting for personally. That's just my personal take. So hopefully, if you guys don't vote NJ, it's okay. Like I never really disclose which one I want to trade, but I'm telling you in this Forex Friday, I want NJ. So hopefully you guys vote NJ. Hopefully it wins. Try to be fair. Cat J, UJ, yeah, like it. UJ's definitely gonna make an all record high, and then probably crash. Dollar's probably gonna crash, but we'll see. UJ is going to keep going, outpacing the yen so far, but things are going to change, I think, unless we're watching and observing a mega trend. And I think we've been observing a mega trend with the yen crosses for some time now. So try to take advantage of current market environments. You only got certain lifetimes, right, to really make a chunk of money off of trading because markets will change. And think about trading certain months and certain years where, man, a whole year is just consolidating. It's trash. You want those years where market's moving, want to move, volatile market. So we got that because of the rate changes. And now they're about to start cutting sooner or later. So watch the domino effect. You're gonna start hearing, this bank cut. I mean, or defaulted actually. This bank defaulted, but the central banks cut rates and this and that, and this company went out of business. You're gonna start hearing all that stuff. Um, yeah, I'm not doing oil again. I'm not using UCAD and large and down. I don't like it, but it's trading down into a bullish order block could be a play for higher. So you see how that aligns too with NU? I like that. EU, we did EU. EU could also make the list again too. Like EU is a small down candle is creating what? A higher swing low too. Right? This could be a false break below this swing low. Could be another false break below this swing low. One, two, three. Look how this third candle's high is broken here. It trades up to get some type of leg higher, some type of profit higher. But then we see pullback here. So if you're a swing trader, you're going off that idea that I was talking about, you would still be holding this trade, but you would be in drawdown, right? You're still believing that E is going to keep going higher. So long-term play. That's something for Swing traders are worried about, not day traders. Day traders are worried about like quick money, in and out, in and out, in and out, day and day. How much money can I make in one day? Type stuff. Swing traders are like the next 20 days, we're trying to make money for the next 20 days. We're holding this trade for 20 days. We're holding this trade for the entire month, 2 months, 3 months. Position traders are holding this for 4 months, 6 months, half the year, the entire year, you know, and that's just levels to it. But right now, I think NJ is my favorite contender. Mm, NJ and AU, small range too. I like it a small candle, right? Now the filtering process. It's a small range candle. I want to catch the large range. I want to catch these large candles like this. Oops, sorry. These large candles. I want to catch those. They generally happen after small candles and also small down candles, the ones that are going up. Same thing, vice versa. Those large candles that go down, they normally happen after small candles or small up candles. I like to see that. There's a small up candle here, large candle starts kicking in, and then the next one really kicks in. Then it goes back to small. It's a natural price cycle in the market. And I thank Larry Williams for teaching people that in this book. Really nice concept to understand. But that's my filtering process. So hopefully that makes sense. And we're going to move on to gold versus DXY. Started this so late. It's like 1 a.m. over here in New York. So gold right now. Yeah, I wouldn't touch gold. So let's jump into gold and DXY right now. Gold, man. Gold's in a funny spot. And I told you guys this last couple of Forex Fridays. Buy gold. Said buy gold, right? I said, hey, do your due diligence. Disclaimer. It's all on you if you buy gold. It's on you, right? Do your personal due diligence on what's going on with gold. But I said I knew it. Gold was going to go higher, even in this environment with everything that's going on in the world, with everything that's happening around the banking situation, everything that's happening with the interest rate situation, everything that's happening with the wars, with the tensions, with AI or technology, a lot of things, crypto, a lot of things are happening right now. Um, Before I say another word, this is very important. I want you guys to know this. I want you guys to take your time and study something called the milkshake theory. I didn't coin this theory, right? Just do a Google search. That's all I'm going to tell you right now. I think it would be in your best interest to learn this theory. Now, it's only a theory. And thus far, right now in current time, this theory has been showing some truth and it's coming to true right now currently. Now, that's not to say this theory is going to continue to hold up in the next couple of months or the next year or whatever, but right now it's showing itself that it's happening. So Google search, say it one more time. It's called the milkshake theory. Go on Google or go on YouTube and you're going to know that there's one specific guy who coined it and he has a whole YouTube channel dedicated to this theory. And I totally like the theory, right? It's a feasible theory, it's a logical theory, it's an objective theory, it's not subjective. And you can see how it can really be true and it could be happening and coming to fruition. So take your time and look into the milkshake theory. Right now, we can see gold is going higher, DXY is going higher, stocks are going higher, bond yields are going higher. There's something going on in the market, and some commodities are going higher too. There's something wrong with the market because they're not following cold correlation. If gold is going higher, how in the world is dollar going up? US dollar going up? That doesn't make any sense. How is stocks going up and US dollar is still going up? That doesn't make any sense either. That's not following the fundamental codes of the market correlation. Something is wrong with the market. Some people will even go as far as to say something's broken with the market. The market's broken, right? Some people would say that. If gold goes down, dollars should go up. But instead, gold's going up and dollars going up. That doesn't make sense. If stocks go up, dollar goes down, but it's not happening. So something is currently underlying in the marketplace that we truly don't understand. But if you look into the milkshake theory, it gives some type of perspective or ideology or belief into what's happening in the current market conditions. I figured that gold was going to keep going higher. Why? Because it's time. It was due for gold to go higher. Just look at gold versus dollar. Now, not as impressive as the chart, like Bitcoin. Bitcoin's doing numbers, but gold's also doing numbers. Right? Positive returns for those have been investing in gold. Shout out to them. Pats on your back for those that have brought gold or have invested into, like, maybe, I don't know, gold ETFs or gold mining stocks, whatever. I'm not sure. I don't think, do your due diligence, but those that have been buying physical gold, you guys can now sell that at a premium. Congrats. You could sell that now at an ounce of 2,000 and change. Congrats to you if you're able to get that off. If you're able to sell it, that's the best part. That's the difficult part. If you're able to sell it, people are still buying at these prices. Who? But if you're able to sell it here, congrats to you. You're about to cash out big. Cash out big. But gold's gonna continue going higher. That same idea that we can see even here is playing true. This is a yearly chart. After a year that's down, notice how gold reacts after down years. Runs. Just keeps running. Especially when we were in this consolidation here. Now I forgot what era this is. There's a lot of stuff going on around this time point. But I do know after this down month here, the price action just runs higher. After the down month, think about it, it's a down small month. There's no large cycles yet. The largest candle we had was here in 79. At least for as far as I can see in what trading view showing. The largest candle here we had was here in 79. Runs up, gets everybody long, runs even higher, and then it dumps. It just crashes. Gold crashes, right? It's the first gold crash we really see, or maybe second, but I think this is like the largest one we see. Crash. Gold crashes, it picks back up, makes the all-time high, crashes again, or retraces. I wouldn't call that a crash, but retraces here, crashes here, then it retraces again, retraces, goes higher. So it was inevitable that this was going to keep going higher. We could even compare this gold to Aussie. Man, gold to Aussie is just on a, it looks like a straight line. It's really crazy when you see this. People will tell you markets don't run in a straight line. Well, I'm showing you one. Yo, I'm cracking myself up. I'm showing you one. This is a market that's literally running in a straight line, at least from what we have with TradingView, the data. I'm just going off of what we have. The oldest data that's showing right now for this gold versus Aussie '06. There could be a lot more data behind it, but this thing is a straight line. Another one. This thing is a straight line. Like this thing doesn't stop. Gold versus euro. This thing doesn't stop. But you don't hear people talking about things like this, right? Don't hear nobody talking about this stuff in the Forex community because everything is like, I want it super difficult. I don't want the easy way out. I want the hardest way to trade. So I want to trade something that goes up and down every couple of months. This thing only goes up every month. It's crazy. It's honestly insane. It doesn't matter what we're looking at. Gold CAD. This thing is a straight line, guys. I'm not saying it's like up like an arrow, but it pretty much should be. So it looks like it's crazy. And look at after the down year. 1-1. Oh my gosh, guys. This is gold, bro. Literally gold, what I'm telling you. Gold. If you're able to get an account and buy and hold, right? Buy and hold, could potentially see some money in the near future, right? Couple years, 10 years from now, 15 years from now, open that account up. Your longs finally played off. Not saying here, telling you that gold is going to hold the test of time. I'm not telling you. But right now, that we see with the based on the data and where we're living, life is all about what? Probabilities, risking, gambling, right? We all gamble at life. I want you to know the pure essence of a human being is gambling. Your whole existence is a gamble. If anybody hasn't told you, I'm telling you now. Your whole existence is a gamble. The whole fact that we continue to push a race forward, to push forward humankind, is a gamble. It's all a gamble. Every move that you make is a gamble because we're taking the risk, we're taking the odds that things could be better, right? That's always the gamble. We don't over gamble. Nobody gambles for things to be worse. We gamble that there's a possibility things could be better. This is why people play the lottery. People play the lotto, right? Because there's a gamble that you can win big, and everybody wants to win big. And that's what we're all trying to do in life. And we all don't win big, but we don't have to win big. We can win close to big, right? We're not all going to win, and we're not all going to be trillionaires. It wouldn't work in this system, at least, that we live in. We all can't be millionaires. We all can't be Forex traders. We all can't be traders. Imagine everybody in the world was a trader. No doctors, no nurses, no mechanics, no pilots, right? No captains of ships, no militaries, nothing. Everybody's trades. Wouldn't be a real ideal world. So you got to pick your poison and what you're gonna do in life. And I picked my poison. Um, Dollar, however, right now gold's going up. Dollar right now, max. Just not the max chart of dollar, right? Someone in the chat actually showed me the max chart of yen, and I was actually shocked. I was like, wow. At one point, the Japanese yen was the reserve currency of the world, right? I was born. I currently am living in an era where dollar is ruling king. But there was an era in the world where Japanese yen was king. It's crazy, right? History. Gotta learn that. It's really important. But right now we're seeing dollar slowly creep back up, gain some value. Now we're not saying dollar is gonna get back to all-time highs and start appreciating again. It's still in a depreciative state. It's still cheaper than when it was back here, 85. Wow. They've been scamming people. It's crazy for years or decades, bro. Generations they've been scamming people. And people have been playing along to this system and making this the king currency. It's crazy. Um, but we had a down year, 2023. And I can see dollar making a comeback right now, currently. But if we look at it from daily, remember what I just said. What I just said was really crucial. We had a down year. Last year, 2023 was down. That means 2024 could be an up month. Sorry, up year. We're gonna get back to what this swing high in 2022. Watch. Stock market's making all-time highs. I think dollar can give us some new highs too, potentially. With the way it's running now, or everybody's just going higher. So you see something's not right. Sorry, daily. Look at that. Dollar's been going higher since the beginning of the month. Year. Correction. 2023. Split this in half. Put gold on the right side. Let's put some real money on the real side, right? Here. 2024. Something's not right. Come on. Something's not right with the market. It's night and day. Something's gonna happen. We all know that. Something's gonna happen. It's just brewing right now. How is dollar up? And gold is up. Let's not forget. What else do we have that's up? That's breaking code. S&P. Man, bro, this is crazy. Stockholders are happy. It's rigged. So everybody knows it's rigged. Why would anybody want stocks to go down if you're investing into full shares, not playing puts or calls like options? But if you're investing as an investor in a company, why would you ever want the company to be devalued or lose credibility in the public's eye or not be purposeful in the society's advancement? You want it to be so that your investments go higher. You make money doing nothing by just putting capital in. And man, people that haven't invested since quantitative easing, man, increasing rates after this huge retracement, man, pretty much a crash. 2021. Crash coming back, quick turnaround. After every crash is a quick turnaround. Boom, stocks pick back up, all-time highs. This thing is running, 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 running. And I know everybody can feel like that's not right. Obviously, it's not right. It's rigged. How could something just keep going up like that? Would you want to bet against that? Yeah, I would. Anybody would want to challenge this. Anybody say, "I'm going short. I'm going short on this market. I'm going short." True. But dollar and S&P cannot be going up higher. So understand that what we're watching in price is not natural. At least in certain cycles. I guess it's natural when things are going to explode and spill over and there's going to be a lot of eruptions around the world with currency and banking system and debt. So I guess that's what happens in these systems. So it's nice to see, we want to be aware of environments like this because 10 years from now, if we're still trading, right? If you're still a trader 10 years from now, you want to be like, yo, I've experienced this before. I experienced inflation before. I've seen how markets reacted when central banks start increasing rates and start printing trillions of dollars and start giving stimulus and start cutting jobs or making, you know, prices higher so that companies start laying off people. It's the whole point of raising interest rates. Prices go up, companies can't pay, so they got to lay people off. Hey, you're not a part of the margin profit. Let's cut you off. We have to make up somehow. We can't be paying you. We need less people in office space. So it's the system we live in. What are you gonna do? Revolt? You're gonna change the world? Yeah, possibly. It will happen. I don't agree with the system, but conversation for another time, not for this platform. So hopefully you found this insightful. If you have any questions, please let me know. This is the end of our Zoom. Everything's been recorded. It's gonna be placed on YouTube tomorrow. Sold my someone said okay, cool. Sold my gold ETF because of the charts and pushed into yeah. Definitely stick to your indexes. Safe call, my friend. VTI, VTO. Yep. Safe. Buy and hold those mutual funds. Do not play no IPOs, bro. You ain't getting no IPOs, no new companies, new businesses coming out that are gonna be thriving right now. Unless you're an existing company like Nvidia. Oh, have y'all seen Nvidia and what they're doing with AI? I'm not like sitting here and I'm like a huge advocate for them or anything, but bro, have y'all been looking at Nvidia stock price? Bruh, bruh. This thing, 10x, bro. 10x. Look at this thing, bro. They taking over the market, bro. Look at this, bro. Just in 2022, actually not. Back in 2020, this thing was just $50, 50 cash. It's now $903 to get a share. Crazy, crazy times we were living in, bro. Bubble, AI bubble. Who knows? I don't know. I don't like to get into too much speculation. Drives you crazy sometimes. There's no point in to drive yourself crazy. Buy, hold. If you don't believe in it, leave it alone. Move on. All right. I don't see no questions, so I ain't gonna ramble your ears off. I'm gonna catch you guys Monday. I'm gonna put up that poll tonight. I'm gonna double check to see if there's any other pairs that I want to trade, and I'll put that poll up. So far, AU and NU made the poll. So hopefully you found this insightful. See you guys later. Peace.